What up, Hyperchange? Welcome to another episode of Stocks 101. Today we are talking about the share count and shares outstanding. This is an incredibly important financial metric. It's one of the first things I look up when analyzing a company. It's a metric that doesn't get enough love. Almost nobody ever talks about it. Companies don't talk about it, but I think it is, and it may seem boring at first, but I think this is one of the most important metrics to understanding the valuation of a company and therefore making an investment decision. And so I wanted to talk to you about it today. And actually, just a quick little story. The reason why I got inspired to make this episode is because I was originally going to do an episode on Square, the payments company. I was reading their quarterly letter. They had a ton of dilution in their share count. Shares outstanding went from like 380 million to like 470 million in just one quarter. And I couldn't figure out why. And I was going through all these filings to read it. It was super complicated. And then I just got so frustrated that it was so difficult to find the amount of shares outstanding. But Square's not the point. But the point being is, why is this metric so important? Why was I looking at it for Square? It's basically how big is the pie? How many shares are there out there at a given time? And this is the most important piece of valuing a company because when you know the share count, then you can multiply it by the price per share, and then you get what's called the market capitalization, which is the value of the company on the stock market. So when you hear people say, Apple's worth $1 trillion, or Tesla's worth 50 billion, or Tesla's worth more than Ford, they're all talking about this number called market capitalization, which is, the first way to understand and think about a company. How much is the stock market valuing this firm at? And the most important number to track or to figure out how much the market is valuing the value of the company is how many shares are there. And so if you don't know how many shares there are out there of a company you invested in, then I don't know how you're looking at a valuation. And I'm a little bit frustrated about this because I think this is a metric that's so simple. It's so important. And it's a lens that I look through every company I analyze with, and almost no company makes it easy to find what the current share count is, how it's trending over time. They don't offer any real guidance about where it's going, about what they expect on it. I mean, just for example, for Square, I hate to throw them under the bus, but they have all these fancy charts of adjusted EBITDA, net revenue, share compensation, all these fancy charts, and yet yet the one metric that I'm just trying to figure out how many shares are there outstanding, I can't get a clear handle on. First, I want to debunk the theory that when even the amount of people I talk to that think Tesla's worth 350 per share, but Apple's worth 200 per share, so Tesla's worth more than Apple. No. The share price is almost totally irrelevant by itself. It has no meaning about the value of a company without knowing how many shares there are. So this is back to that market capitalization calculation. If you want to know how much a company's worth, you know how many shares there are and multiply it by the price per share. Super simple calculation. There's just two numbers, but companies make it so hard to get the shares outstanding, which is frustrating. But anyway, let's just illustrate this with some charts. So you have the share count. And now I'm going to give you an example of, there's two ways the share count, you can think about company share counts evolving over time. The first is dilution. The pie gets bigger, AKA if the pie is getting bigger and you own the same amount of shares, your ownership in a company is decreasing. So an example of a company like this is Tesla. So as we can see, Tesla's share count has increased pretty consistently over time. And a lot of people may be like, oh my God, I'm freaking out. My ownership of Tesla is getting reduced. There's a ton of factors going into this. Dilution, when thinking about it, is super complicated because, Tesla has been in rapid growth mode. They've been losing money for years. That means every year they sell a little bit more stock to be able to fund their operations, in the past at least. And that means that your piece of the pie has gotten a little bit smaller each year. But then it's also important to note that, so Tesla's share count has gone from 101 million to 166 million in the past 6 years. That's about 65% increase. Okay, but in the same period, they've delivered, hundreds of percent increase in cars delivered, hundreds percent increase in revenue, hundreds percent increase in gross profit. And so when you adjust the growth for the dilution, Tesla's still, in my opinion, generating a ton of value per share, even though they're diluting. So it's important to keep that in mind. But this is an example of a company that's diluting its share count. It's getting bigger. And you'll notice in 2017, just for example, there was a huge jump from 144 to 166 million because the company acquired SolarCity with a good amount of stock. And so they had to issue more stock to make that acquisition. So that's just an example of a reason why the share count would go up. And so dilution means the pie is getting bigger. And then the flip side of that is we have buybacks. Basically, the pie is getting smaller. And this is when a company will be buying back its share to reduce its overall share count, meaning your piece of the pie is getting bigger without doing anything. First, I wanted to bring up an example of a company doing this, Apple. Apple's incredibly profitable. They're printing tens and tens of billions of dollars in profit per quarter, and they don't really have anywhere to put their money. I mean, it's just piling up in their bank account. So a lot of it, they're returning value to shareholders, so to speak, by buying back their stock. And as you can see, Apple's shares outstanding has reduced dramatically in the past 6 years from about 6.6 to 5 billion, meaning your piece of the pie has gone up by about 20 or 30%. And so now let's give a really simple, some charts to give a really simple explanation to maybe help make this a little clearer. So this is what an example of a buyback would look like. So let's say random company has 100 shares outstanding and you own 1 share of stock out of the 100 shares that exist for this company. In percentage terms, you own about 1% of the company and other investors own 99% of the company. Pretty simple and straightforward there. Now, this is another way to look at that ownership of the company. And as you can see, let's pretend this is sort of like Apple and they're buying back shares. In year 1, there's 100 shares outstanding. And in year 2, they buy back half the stock. So there's only 50 shares outstanding. And that little blue piece at the bottom there is your ownership. And as you can see, we're already noticing that your ownership has stayed flat even though the share count has gone down, which means that as a percentage of the pie, because the pie's gotten smaller, even though you still own 1 share, you haven't bought a single share yet, you still own just 1, but because there's only 50 shares outstanding instead of 100, your ownership has gone up from 1% to 2%. You've doubled your ownership of the company. And so I hope that makes sense, but that's just a really basic way of thinking of like your ownership in the company, just because you're not buying or selling shares, is changing depending on whether the company's diluting or buying back stock. And so that's why it's super, super important to understand, what is the trajectory of the share count of the company I'm invested in? Are they reducing their share count because they're profitable and buying back stock? Is their share count staying basically flat because they're break even and they're not messing with it? Or is their share count expanding because they're selling stock to raise money to fund the business? And none of these things are bad or good. They're just different. And I would argue, just as a rule of thumb, companies early in their growth stages are more likely to dilute because they're not making money and they need to get money somehow, so they sell stock. Companies more mature who are generating a bunch of excess cash are likely to be reducing their share count. So this gets us to the most important topic that I want to discuss, or tying this all together to market cap, which is price times shares outstanding. So this is the way to value a company super simply. So this is why the share count was so important. So if we have Apple's share count here, as you can see in fiscal 18, it's 5 billion. So now let's pull up what Apple is trading for today. You can do this on Google Finance. It's about 207 per share. So we take 5 billion shares outstanding times 207 per share, and we get about a $1.035 trillion market cap, or about $1 trillion in market cap for Apple. And so that is the calculation that everybody's doing to figure out, how much is Apple worth? Are they going to be the first $1 trillion company? And as you can see, the amount of shares outstanding is like one of the most, it's half the equation there. And so without knowing that number and without having a good grasp of that number, you're not going to know what it's worth. And this is why in another episode, maybe to make things, I hope this isn't too complicated, but I expressed why I think Apple could go to $500 per share, more than double the share price, but the value of the company could actually less than double. How is that working? Because I'm expecting, this is just a rough estimate that I made, that Apple will continue to buy back stock pretty aggressively going forward. And therefore, with the amount of shares going down so quickly, the share price needs to increase dramatically. If I'm expecting Apple to hit 2 trillion soon and double their value, the stock price will more than double because the share count's not staying flat, it's going down. So in that equation, that 5 billion share number could be 4 billion shares. 4 billion shares times 500 per share is a $2 trillion market cap. So that's how Apple's value could double, but the stock will more than double because they're buying back stock. I hope that makes sense. Anyway, let's do the same calculation for Tesla. And Tesla at the end of 2017 had 166 million shares outstanding times 352 per share equals about a $58 billion market cap. Now you may be saying like, well, Tesla's the opposite of Apple. Their share count's actually expanding. Now it's about 175 million. And just for reference, like when I value Tesla, the way I think about this and why I think it's not just important to know the share count, but it's super important to understand the trajectory of the share count. And that's, if I could leave you with anything in this episode, it's you should have a gut feeling of what is the share count today, where do I think it's headed, and why, and what assumptions are priced into that. So for instance, I said Tesla has about 175 million shares outstanding. I'm assuming that there could be a totally huge recession. The company is going to have to sell 10 million new shares of stock at, let's say, only 150 per share because the share price has crashed because they need $1 billion, and that'll raise them $1.5 billion in capital, which is going to be the emergency funding they need to get through a recession. So I always add like a buffer of 10 million shares when I value Tesla because I just want to price that in, and I understand that this is a company that could dilute. Also, it's super important to understand that companies have, stock-based compensation. So most tech companies are invested in, actually almost all of them, will be diluting a little bit each quarter. Maybe it's 2% per year, maybe it's 5% per year, definitely a number you should look into, and that is to pay employees in stock. And so tying it back together, this is why it was so frustrating me to look at Square, because when I go into their, quarterly letter and their financial statements, I have to get onto page 34 of their 10Q SEC filing to be able to figure out why they've added an extra like 70 million shares this quarter almost out of nowhere, which come from stock options and restricted units, convertible senior notes, common stock warrants, and employee stock purchase plan. And why I'm super confused, and maybe someone could help me, is like why they definitely had employee stock compensation plans and restricted stock units and warrants before this quarter. So why are they all pricing that in this quarter? Are they going to continue diluting this much going forward? Is this just a 1 quarter thing? Like they don't make it clear at all. So to find, but let's say you need to find this number if you're doing research on a company. So some people like Snapchat will actually include it in their press release telling you what the outstanding diluted share count is, which is awesome. Thank you, Snapchat. You're leading the way. But most companies won't. So you'll have to go to the 10Q SEC filing where they put all their financials. And then if you go to the income statement, at the bottom of the income statement, and there's a line that says weighted average shares to compute net income loss per share. So, and they have basic and diluted. So these are the share counts that they're using to calculate earnings per share. This is essentially the diluted share count here is essentially the current amount of shares outstanding. So as you can see for Square, it went up, from 384 million in Q3 2017 to 475 million in Q3 2018, which is like a 33% increase or something huge, which I still am a little bit confused by, but that is the number that you need to use for the shares outstanding. So, and I wish there was a way to like explain to make it easier to find this number and easier to expect the trajectory of this number, but there's just not. So my plea to all CEOs is please make it super easy to understand your share count. Put in like right in the top line of your quarterly letter or your earnings release, like this is how many shares are outstanding this quarter. This is how we expect this number to change. Maybe put a nice chart of the shares outstanding over time. I mean, this is the amount of insight you can get from looking at the share count outstanding is mind-boggling, and it's just such a key metric of the bedrock of the company's valuation that it's so frustrating that they make this hard to find. And then beyond that, there's many companies like Square have Class A and Class B stock, and then or maybe preferred shares. So you have to go in and read all the SEC filings to calculate who really owns what are the rights of these different shareholders, what is the structure. Like it's really, really complicated, and it makes it really tough for investors. I've been investing for 10 years, and I was reading Square's filing for an hour and this morning, and I just looking for the share count and what is happening and why it's moving up so much, and I can't find a good explanation. The company's at break even. That they're not burning a ton of money, so why are they diluting so much? I just don't know. It just doesn't make sense. And so I feel like if I struggle to figure out why, then a ton of other people do too, and that is really sad. So my open letter to every single CEO, an open call to them, is please make it super simple to read and understand the trajectory of your share count, because that is such an important financial metric, and it's really holding back the understanding of your company by not being transparent with that. And so like just as a couple tips, like the reason why this is one of the first numbers I look at a company is the amount of, like, I used to invest in small companies like micro caps and small caps, often losing a lot of money. Maybe they're growing quickly. And a lot of these companies are garbage that are frankly like penny stocks. And the biggest way I know how to differentiate between garbage and non-garbage in the micro cap world is look at the share count. Companies will increase their share count by 10x in 2 years, go from like 100 shares to 1,000 shares. So your piece of the pie goes from 1% to 0.1% in a couple years. That's a huge red flag. But there's a ton of companies that do that dilute constantly. And that is the easiest way to figure out if management is BS or not, is to look at the trajectory of that share count, figure out how it's changing over time. Tesla, sure, they're increasing their share count, but it makes a lot of sense to me. They increased their share count 60% in 7 years, but their revenue's up like 10,000% in that same period. So on a per share basis, it's very accretive. So you need to be adjusting all of these metrics for a per share basis. And the only way to do that is to understand the share count. And so anyway, this is an episode of Stocks 101, a little bit of ranting included. But I just wanted to leave you all with this notion that share count is like one of the most important metrics of a company. You should all know the share count of the companies you're investing in. You should all know how you expect that share count to change over time. And if you don't know those things, I would make it a first priority to understand them, because that is going to be a huge determinant of the value of the company, is how many shares are outstanding. How big is the pie? That's what you need to be asking. Is the pie getting bigger? Is the pie getting smaller? Why is the pie getting bigger? Why is the pie getting smaller? These are questions you need to be asking if you want to be a great investor. Anyway, this is Stocks 101. I hope you liked it. Please let me know what you think in the comments below. If there was anything that didn't make sense, I'll try and clarify. Anyway, this is Hyperchange. Huge shout out to all of our Patreon producers, supporters. Just means so much that people support the channel there. Definitely check out our Patreon page. Anyway, I'll see you guys next time. Peace.